Okay, guys, so I'm very sorry we're starting 2 minutes late. Like I said, I made a mistake, but it's all good now. Only 2 minutes late. We should still have plenty of time to cover everything I wanted to cover. So today we're going to be looking at trading less with higher time frames. We're going to be looking at trading higher time frame charts. But before we get started, and you may have noticed this already, I just wanted to say about my webinars. You guys have probably been to Forex webinars before, I assume. My webinars, they don't tend to be flashy and well polished. I try to concentrate on the content. So I haven't actually prepared anything for this webinar because I find that reading off a script and preparing everything kind of makes it sound a little boring and a little rehearsed. I just look for some recent trades, throw them up on my charts, and then we talk about them, and you guys can ask questions and all that stuff. So this webinar is, I'm hoping I'm going to be able to give you guys some good content, but it's not going to be a very flashy, well-polished marketing webinar or anything like that. So yeah, just so you guys know that, don't expect a polished webinar with slides and all that kind of stuff. We're just going to talk Forex. So anyway, like I said, today we're going to talk about trading Forex on larger time frames. We're mostly going to be looking at 8-hour charts, 12-hour charts, and daily charts. But I also want to take a look at 4-hour charts because 4-hour charts are technically larger time frames too. I mean, when you consider a lot of people are trading 5-minute charts, 1-minute charts, 30-minute charts, 1-hour charts, a 4-hour chart is a pretty large time frame, but mostly we're going to be looking at 8-hour charts, 12-hour charts, and daily charts. Also 6-hour charts, which I've been looking at recently, which are quite good. Now, I know not everyone has access to 6-hour, 8-hour, 12-hour. These are not really common because most people are still using MT4, which is, I don't know, I guess pretty outdated. They don't have access to 6-hour, 8-hour, and 12-hour charts, but you know, that's not a bad thing. There are ways around that. I mean, there's other charting platforms out there. One of them is Chart IQ. They have a kind of web-based charting software. Another one I've been looking at recently is called Motive Wave. I'm not endorsing any of these. I'm just saying, there's other options out there for 8-hour charts. MT5 too. MT5 has 6-hour, 8-hour, 12-hour. So we are going to be talking about some time frames that not everyone may have access to, but keep in mind that anything we talk about in today's webinar is going to apply to the daily charts too. I mean, 4-hour and daily charts are still large time frames, and everything we talk about is going to apply to them. So yes, I'm going to show you examples on 8-hour charts, on 12-hour charts, but everything here applies to daily and it applies to 4-hour charts just the same. So don't be too worried if you can't get access to them. But if you can't, you should look around and look to change your charting platform because you're missing out on a lot if you don't have all these time frames. Because a lot of the times, price action setups, they're forming on, let's say, the 8-hour chart, but they don't look quite strong on the 8-hour chart. They're not forming well on the 8-hour chart. And when you switch to the 12-hour chart, the setup gets much clearer, which I'll show you today. So, switching time frames sometimes gives you a much clearer picture of what's happening. And it's good to have multiple time frames. So if you can get them, you should really do that. Nick, how long is the webinar going to last? The webinar is going to last about an hour. So we got about 54 minutes left, but usually my webinars tend to go on for a lot longer than intended. So we're going to be here for about an hour, but it's probably going to go on for an extra half hour because I get carried away answering everyone's questions. So anyway, let's keep going. I would ask that you guys try to leave most questions until the end, please. And if someone's asking questions while I'm talking, for all you guys that are here right now, could you please remind them to keep questions, well, not necessarily to the end, but till I ask for questions, because I don't want to keep looking away from my charts over to see the questions and get everything mixed up. So what we're going to do today is we're going to take a look at some recent trade examples. These are recent trade examples that either I've taken or members of the advanced course have taken, trades taken based on my strategy. That's the important part. These are real trades and they're recent, within the last, let's say 2-3 weeks. And the reason I want to talk about recent trades is because I don't like going back 6 months and saying, "Oh, check out this perfect trade where we got 500 pips because it moved perfectly." I want to take a look at recent trades that, they worked out, but they're not perfect. So I want to take a look at some recent trades today, and I'm going to show you how these trades were taken on larger time frames. And I want to show you how you could have taken these trades even if you had very limited time to trade. Because that's the important thing. That's why I think most of you are here, because you want to learn how to trade with limited time. Because, I mean, these days, who has time to spend 8 hours in front of their screen looking at their charts? Some of us do, I guess, if you're retired or something like that. But most of us, uh, I'll answer that question later. But most of us, we don't have that time to spend 8 hours in front of our screen looking at our charts all day. So most people work, or you have kids, you go to college, all that kind of stuff. You don't have that amount of time to spend looking at your charts. And I'm the same. For me, I really don't like spending my whole day in front of my computer looking at charts. So I developed a strategy that doesn't require that. I developed a strategy that's very, very low maintenance. That is the key to my strategy, low maintenance. And that's what we're going to be looking at today. We're going to be looking at these trade examples, and I'm going to show you how these trade examples are low maintenance. I'm also going to show you the basic price action principles that I use to take these trades, and how I use those same principles to manage the trades. We're not going to be delving too deeply into my strategy in this webinar, but I did a set of webinars recently. It was free webinars over the course of 3 days where I talked about my strategy in almost every detail that you would need. And I'm going to link you to those webinars after this webinar. I'm going to link you to those webinars. So, we're going to go over the basics of my strategy today. But if you want to take a deeper look at my strategy, then you can review those webinars. It's about, I don't know, 3 hours, 4 hours of videos. That I'll link you to after this. So anyway, let's get started. Before we get started, are there any questions, guys? I'll answer Gabriel's question. Do you use any other confirmation besides candlestick patterns? Yeah, I do. I use support and resistance areas, but other than that, no. Elton is asking, Nick, are your charts New York close, or doesn't it matter? Every broker closes at a different time. Does this matter as setups will look different on each broker? It matters only a little bit. There are going to be cases where, if you're trading with a broker that has slightly different looking candles because candles are opening at different times, you may miss some of the trades I see, and I may miss some of the trades you see. But overall, it doesn't make that much a difference, especially if you have multiple time frames. If you have multiple time frames like the 6 hour, 8 hour, 12 hour, and you're able to switch between those time frames, you should be able to catch most setups, because when you switch between the time frames, you're going to be viewing price action slightly differently each time, and that's going to that change in data is going to allow you to see those trades that I would see on my charting platform, because my candles are slightly different. But anyway, it looks like that is... there's a few other questions, but no, we'll continue with the webinar for now, and I'll answer everything else later. Okay, so we're going to start by looking at this GBP USD example. Ended up being quite a good trade, so we'll check this trade out in detail, and I'll show you exactly how, step by step, you could have taken this trade in a very limited time. So the first part of this trade was the preceding trend. The preceding trend started around about here. This was at the end of last week. Again, this is an 8-hour GBP USD chart, by the way. So 8-hour GBP USD chart, preceding trend started here. The preceding trend was, it was quite slow to take off because we had a bunch of indecision here, but overall it was an okay preceding trend. Price dropped down, hit this support area, and indecision formed. Now, for those of you who know about my strategy, we look for Lynn is asking, Nick, I spread bet. Is this webinar still useful to me? Yeah, definitely. I mean, price action works on all kinds of charts, all kinds of markets. It's not limited to Forex. It's not limited by time frames. Price action is just price action. It's how price reacts when it runs into areas of support resistance, and it's just understanding the fundamentals of how price moves. So it doesn't matter if you spread bet. It's all going to be the same thing. But anyway, let's keep going, and let's leave questions until I ask for questions, please, guys. So this trade can be split up into 3 parts, and every trade I take is split up into these same 3 parts. We have the preceding trend. The preceding trend is step 1. The preceding trend is the trend that leads into an area of support or resistance. When that trend hits the area of support resistance, what we're looking for is we're looking for buyers or sellers. In the case of this trade, because it's a short trade and sellers are pushing into the area of support, a support is an area full of buyers. We're looking for buyers to take control of price here. And we're looking for a sign that buyers are taking control of price. And usually this sign is an indecision candle. This is what I look for. This is an indecision candle. This one before it is indecision too, but this is the most prominent one. So indecision is essentially a sign that, in this case, buyers are trying to take control of price. They're pushing up against the sellers. So that's part 2. So we have preceding trend, we have indecision, and then we have the reversal trend. The reversal trend is where you enter. Now, the entry for this trade, it's really up to you where you choose to enter. There's what I call a risky entry, which would probably be down here, and then there's a safe entry, which would be up here. So overall, there are three steps to taking any trade using my strategy: the preceding trend, the indecision, and then there's where you enter, the reversal trend, this trend here. Now, because this is an 8-hour chart, you can split your day up. When you're looking at these charts, you can split your day up into pretty much 3 parts. If you're trading exclusively 8-hour charts, you can check your charts only 3 times per day and still take trades like this, still take profitable trades. So if you're checking your charts 3 times per day, you've got 8, 16, 24. 8-hour candles, there's 3 8-hour candles in a day. So you check this candle, you see the preceding trend heading into the area of support. 8 hours later, you check this candle, you see indecision forming on top of support. 8 hours after that, you check this candle, and again, you see some indecision forming on top of a support area. Then you check, you place your entry order. You could place an automated entry order, or if you have time, you could you could watch your charts. But if you don't have time, you can place an automated entry order. So you set your entry order here, then you check back 8 hours later, and price is up here. This could be your first target. Then you check 8 hours later, and this candle is formed, which could mean you might want to exit. But the point I'm trying to make is you could check into your charts about every 8 hours, and you could still spot these trades. You have so much time to spot this setup. You have around about 16 hours, because when this first candle forms on top of the area of support, you know on GBP USD 8 hour, price is forming on top of support. So you know from here that you might be interested in taking a trade. Then when you check back 8 hours later, price hasn't moved up and you're getting another indecision candle. So again, you know that you could possibly be taking a trade here, and you could set your entry order. So you have a lot of time. It's not like the 5-minute chart where a setup forms and you have to take it within 5 or 10 minutes, otherwise you miss the opportunity completely. With 8-hour charts, you're able to split up your trading into kind of 3 slots, that each day at a specific time you check your charts and you check what's forming on your charts. You could have 10 charts down here, you could just flick through them. If you see indecision forming on top of an area of support or on top of an area of resistance, you can start placing your entry orders and planning the trade. And that's the most important thing. You have a lot of time to plan your trade. You don't have to be rushed. This is what low maintenance trading is. This is what low stress trading is. It's giving yourself a lot of time to think about the trade so you don't have to make quick decisions. You can think, you can plan, and you don't have to take action quickly. That's what low maintenance trading is. I'm just going to quickly read the questions. All right, I'll answer all those questions later. Let's continue. So, I'm going to show you another example on Euro AUD. I'm going to show you 4-hour charts because 4-hour charts, you're going to have to check 4-hour charts more often, but 4-hour charts are also pretty good because you only have to check in every 4 to 8 hours. You don't always have to check in every 4 hours, but there are certain times where you're going to have to check in a little more often, which I'm going to show you right now. And after we take a look at all these trade examples, I'm going to be showing you some more specific details on how I take these trades. So we're just going to quickly go through these examples, and then I'm going to show you exactly how these trades are taken. Okay, so this trade was, again, pretty straightforward. What we had was a pretty strong bearish preceding trend, much better than the bearish preceding trend we had in the other chart. And so this is a 4-hour Euro AUD chart. So with this chart, you had 4 hours, 8 hours, 12 hours, around about 12 hours where, well, no, to be fair, you had about 8 hours where you could start planning this setup, because this candle here, when this formed here, you're already seeing price reacting to this area of support. And when this candle forms here, this is an indecision candle forming right on top of an area of support. So this candle here indicates to you that buyers are now taking control of price, and you could start setting up your trade at this point. So you had about 8 hours here where you could see this trade coming and you could set it up, which is a pretty long time. I mean, you should be able to find 8 hours in a day to check your chart. Well, you should be able to find a time in a day every 8 hours to check your charts. If you can't find that amount of time, then you're going to have to trade daily charts. But to be honest, you're probably not going to be able to trade Forex, because you can't only check your charts once a day. You have to realistically be able to check your charts a few times per day to be able to trade effectively. I mean, even on the daily chart, you need to be able to check a few times per day, especially if you're in a trade. I'll answer that soon, Kate. Okay, so again, this setup is on a 4-hour chart, but because you're trading large time frames, you have a lot of time with this setup to plan it, to execute it. You have a lot of time. You're not rushed. It's low maintenance. Now we're going to look at something that's really low maintenance. These are 2 trades in a row that formed on GBP JPY daily chart. So here, I mean, technically, you could check your charts only once per day on the daily chart, but the important thing is, when you're in a trade, you should check a little more than once per day. When the trade actually triggers, you should be able to check it more often. But when you're looking for setups, if you have very limited time, you can scan your daily charts only once per day, and you could see these setups forming. And the daily chart is pretty much the best time frame for people who don't have much time, because you have usually around about a 24-hour period to plan your trade. If you can't plan your trade in 24 hours, then you probably shouldn't be trading. So we're going to take a look at these 2 setups. Let me remove these ticks, and let's check out the setups. Okay, so we have this setup here. We have a strong bullish preceding trend. We have indecision forming on resistance. If you don't understand what indecision and resistance is, that's fine. We're going to be talking about that very soon. And then you have the reversal trend. So with this setup, you had, you check your chart on this day when this candle closes. You check it when this candle closes. When this candle closes, I mean, around about here, you know that a setup may be forming because it's on top of support. You check price when this candle closes, and that's when you actually plan to enter the trade, when you get this indecision candle forming on top of a resistance area, because that price is reversing here, and then the trade triggers with this candle, and it goes down pretty fast in this case. This is a short trade because you have the bullish preceding trend, but we're going to be talking about that more in a second. Okay, so let's just take a quick look at this one here. So with this one, you had a little bit, this one all happened a little bit quicker, but again, you had a fair bit of time to plan this trade. 1 candle, 2 candles, 3 candles. This is the candle that would have alerted you to the setup, and this would have been the entry candle. So you had a fair bit of time between this candle forming and this candle opening to plan this trade and to actually enter this setup. So let's take a look at how I actually take these trades in a little more detail. This first part of the webinar, I just wanted to show you the basic principles of how trading these larger time frames can give you a lot of time, and it's very low maintenance. But now I want to look at these setups in detail. I want to look at them in a lot of detail. So I want to talk about entries and the actual price action concepts that allow me to see these trades and to spot these trades. So let me check out the questions real quick. All right. Yeah, I'll be answering all those questions pretty much now. Okay, so let's look at these setups. We're going to start with the GBP JPY setups, and then we'll take a look at the New Zealand USD setup and some other setups. We'll start with this setup here. So as I was saying earlier, my trading strategy is split up into 3 parts. It's split up into, well, any trade is split up into 3 parts. It's split into preceding trend, indecision, and reversal trend. So what I look for is a preceding trend, a strong preceding trend that heads into an area of support or resistance. So this preceding trend here is heading into an area of resistance. Now, what is an area of resistance, and how do I place resistance? A resistance area is this area here, and this here is a support area. So a resistance area or a support area are areas full of either buyers or sellers. So this resistance area here, there's a large grouping of sellers in this area. We know there are sellers grouped up here. We know ahead of time, we know before price gets here that there are sellers grouped up here. So when price actually gets here and we start to see indecision forming, when we start to see this candle here, indecision forming, that's when we know that sellers are actually taking control of price. So we know before price gets here that there are sellers here because we've set this area beforehand. And I'm going to explain a few basic concepts about how I place these support resistance areas. When buyers push up into this area, you can clearly see what's happening. This candle here and this candle here, they're strong bullish candles. So what did these candles suggest? That's a question to you guys. What do these strong bullish candles suggest? Lots of bulls in control. Exactly. They suggest buyers are in control of price. Buyers are in control of price. Buyers have power. That's what these candles suggest because they're big, they got white bodies, they're bullish candles. It suggests buyers are in control of price. When buyers hit this area of resistance, this area that we've set here, when buyers hit this area of resistance, we start to see indecision forming. So we go from a bullish controlled market, we go from a market controlled pretty much exclusively by buyers to a market that's undecided. Right now, when you're looking at this candle here, and then this candle here, what these candles tell us is that we've gone from a market controlled by buyers to an undecided market. We're not quite sure who's in control because we're seeing a upper wick, a lower wick, and a very tight body. That's a clear sign that we don't know who's in control of price because we're not getting those strong bullish bodies anymore. In fact, the body of this candle is red, so it's suggesting that sellers are fighting for control of price. Then you get this candle, which again, small upper wick, small lower wick, very, very tight body. Again, this suggests indecision. So think about exactly what's happening here. We have this area placed here, this resistance area. We know ahead of time that when buyers run into this resistance area, they may start to struggle because we know there are sellers grouped up in this area. So we have this area placed here. Our strong preceding trend heads straight into this area. All of a sudden, indecision forms, and we start to see buyers and sellers fighting for control of price. And then we start to see this candle form. Now, this candle, what does this candle suggest? Bearish body pushing down. What does it suggest? Does anyone know? Exactly. Sellers taking control of price. Now, I understand this is very basic, guys, but stick with me here because I'm going to be looking at this in a lot more detail. So this suggests sellers are taking control of price. And when sellers take control of price and they break the low of this candle here, when they break this low, that to me suggests that sellers have taken control of price. They're making a lower low. They're taking control of price. Now, this is a bit of an early entry. I mean, you could enter at the bottom of the support area, because then it's a sign that sellers are clearing support. They're getting out of the support area. So you could enter at the bottom of the support area, or you could just enter when price makes a new low beyond this indecision candle. So that's your entry, and then your stop loss is going to be somewhere up here or up here. It depends a lot on your money management plan. Personally, my stop loss would be... Wait, let me remove these drawings to make it easier. Personally, my stop loss would be around about here, around about 45 pips. My entry is here at the 171.47. My first target would be around about 70 or 80 pips down here. And my second target would be the support area. My second target is almost always the support area. This is the support area. Why is my second target at the support area? Does anyone know? Exactly, because price might turn. Because there's lots of buyers down here. Support is an area full of buyers. Buyers are going to take control of price. Possibly going to take control of price. Not for sure, but they're possibly going to take control of price when price hits this area. So we know this is an area of support. So that would be my second target. So this way of trading is... It's not that complex, but it works very well and it's very effective and it's very consistent, especially in market conditions like we're seeing right now. I'm going to ask you guys, because I've been getting a lot of emails about this. Have you guys noticed recently that volatility has been somewhat low and that price is not quite moving like it used to 4 or 5 months ago? Recently, price has been a little slow over the last 2 months. Okay, cool. So I guess I'm right in saying that you guys have noticed that volatility is a little low. There's not very many big trends, lots of small candles like everyone's saying. And yes, okay, cool. So everyone's noticed that price is not moving like it used to. But this is pretty normal in Forex, and we're going to take a look at that in a few moments. We're going to take a look at some changes in the Forex market and what they mean. We'll actually take a look at it on the GBP/JPY chart, because I was talking about this with advanced course members the other day, and I found something quite interesting. But it's quite normal for price for volatility to drop down in Forex. The way Forex is moving right now is how Forex is most of the time. It's just been for the past few years that The Forex market has changed, but we'll take a look at that in a little bit, probably towards the end of this webinar. But the point I'm trying to make is this kind of trading strategy, it works in all kinds of markets. It works in low volatility markets, high volatility markets. It works in all kinds of markets. It's very adaptable. You're going to find that in low volatility markets with this strategy, you're going to be making less pips, but that doesn't really matter because you just up your position size and, it doesn't matter if you're making less pips, and it's not that much less pips. The point is, there's still a lot of profitable trades, even in low volatility markets, although you might have to make some tweaks. So this trade would have been worth roughly... let me get my calculator real quick. All right, so at its maximum, had you traded this trade perfectly, it would have been worth about 100 pips. But, it's hard to take the trade perfectly. So 100 pips is pretty much the highest you could have got from this trade once it's averaged out. It's probably worth about 80 pips. So, on GBP/JPY daily, you're usually expecting more pips. But in these kind of low volatility conditions, you have to settle for something like 100 pips on a daily chart trade on GBP/JPY. But, regardless of that, even though Forex is in low volatility, you're still getting these setups. They're still forming. So we'll take a look at this next setup, which was down here. Okay, so we got this setup here. Now, this setup is a lot cleaner. It's a lot stronger. Here we have a strong bearish preceding trend. This trend is actually the trend from the previous trade. So the reversal trend from the previous trade, the trend that made the trade profitable, is actually the preceding trend for the next trade, which happens sometimes. So you have a nice strong preceding trend. What do these candles tell you? I'm not even going to wait for everyone to answer because most of you know these candles tell you that sellers are in control of price. Sellers are in complete control of price, especially this candle. I mean, this candle, it just screams sellers are in control of price. Strong bearish body. Pretty much no way not to know that sellers are in control of price when you look at this candle. Then what happens? Sellers hit the support area and we get indecision forming. Indecision forming on top of a support area. Support area is an area full of buyers. We know there are buyers in this area. Indecision forms on top of an area full of buyers, and let me remove these drawings, and then the reversal trend starts. Now, this reversal trend was split by a weekend. So I sometimes don't take these trades that are split by weekends, because I don't like entering on a Friday. But some people in the advanced course took this trade, and it ended up being quite a nice trade. So it was entered around about here, around about the 170.30. Stop loss was just below the support area, and the first target was around about 70 odd pips. Second target was up at the resistance area, because that's always the second target, almost always, is the next resistance area or the next support area. I'm just reading the questions, guys. Give me a sec. Robert, no, it's not. That is an odd question. Robert's asking, is there any way to predict the price of any given pair exactly 83 minutes in the future? But anyway, so where was I? I gotta stop reading questions halfway through talking about trades. Okay, so yeah, this trade was quite a simple setup, and it ended up being quite a profitable setup. We're gonna take a look at New Zealand USD real quick. So you're here, Viet. You actually took this trade, didn't you, Viet? The New Zealand USD one? Yeah, okay, we're going to take a look at your trade. I didn't take this one. unfortunately, but this ended up being quite a good trade. Um, so let's check this one out. Okay, so strong preceding trend. Sellers were in complete control of price. Price hit the 84.20. Now the 84.20 is the support area on New Zealand USD. So this is a pretty strong support area. Oh, wrong tool there. So yeah, this is a pretty strong support area. Indecision formed right on top of the support area. And again, we're seeing these simple concepts at work. They're very simple concepts, but if you use them properly, you can make consistent profits in Forex. And you're doing this on large time frames, 12-hour charts, so it's low maintenance. So you have a very strong preceding trend, you have indecision forming on top of an area of support, and then you have the reversal trend. So for this trade, the entry was, well, Viet, if you're here, you could tell us what your entry was if you remember. Do you remember, Viet? All right, it's not important, but keep looking, and I'll give a basic entry as to where this would have been, because I think you traded this on a different time frame if I remember correctly. But this trade looked its best on the 12-hour, but it was also tradable on the 6-hour. We could see on the 6-hour, um, the indecision was a little more spread out, but we still had indecision forming on top of the support area. But this was taken. This was taken, I think, on the 6-hour by Viet, but I think it looked much better on the 12-hour. But that's just a difference of opinion. It doesn't really matter. The trade was tradable on either time frame. The entry was pretty much the same, and it was good on either time frame. You could also have taken this on the daily. So you know, even if you had even less time that you can't check your 12-hour charts twice a day, you could have taken this on the daily, or you know, if you were just busy one particular day and you didn't check your 12 hours soon enough, this also formed on the daily. So this trade was pretty nice in that it formed across several different time frames, anywhere between the 4-hour, but it's not that good on the 4-hour. But so anywhere between 6-hour, 8-hour, 12-hour daily, you've got this setup forming and it being tradable. Although on the daily, the entry would have been a little bit later. The entry would have been around about up here, because you want price to break the high of the indecision candle before you enter, because that's a sign that buyers have taken control of price. So the entry would have been here at the 84.40, but it still would have been a profitable trade, and yeah, the risk reward ratio would have still been manageable. Just give me a second, guys. I just kicked Robert from the room because it looks like he's spamming. Okay, so it doesn't look like. Oh no, Viet has answered. So yeah, Viet entered on the 6-hour. Your entry was 84.25. So your entry was. We'll switch to the 6-hour and we'll check out how Viet took this trade. 84.25. So your entry was all the way down here. Nice. Stop loss 84.00. So you had a 25 pip stop loss. Yeah, you had multiple targets for profit. I can't remember exactly what they were, but so yeah, this is an example of a trade using this strategy that is forming on multiple time frames, and it's still good on all those time frames. You could trade it 6-hour, 8-hour, 12-hour daily, and it's going to be a good trade regardless. Now, I'm not saying this is always going to happen. You're not always going to get trades forming on multiple time frames that are good on all those time frames, but this trading strategy it has that happen quite a bit where you get trades forming on multiple time frames. So, you could choose the time frame you want to trade. You could trade the daily, the 12-hour, the 8-hour, the 6-hour. Personally, I trade all these time frames. I look at the 4-hour, the 6-hour, 8-hour, 12-hour, and daily. But if you don't have time to do that, you could just look at the 8-hour, 12-hour daily. So what you would do is you would come to your charts each day, 3 times a day, let's say, and you see sellers pushing down on into this area of support. So you see sellers grouping down, sellers pushing down here, and buyers fighting back against the sellers, indecision forming. You switch to the 12-hour, you see the same thing, and all you have to do is check this twice a day, or the daily, and you check this once a day, and you see the same setup forming. Viet, you would trigger happy. Fair enough. For everyone watching the recording, Viet's saying that he agrees that it looks best on the 12-hour, but he was trigger happy, so we entered on the 6-hour. I'm going to answer all those questions in a second, guys. But I just wanted to show you guys the basic concept of the strategy, and now I'm going to go ahead and answer all the questions you have. I wanted to set aside at least 30 minutes to answer questions, but we only have 20 minutes left, but I'm probably going to stay here a lot longer than the 20 minutes. And I'm going to answer specific questions on my strategy. Then at the end of this webinar, I'm going to be giving you a few links, and those links are going to be to webinars. And those webinars are going to discuss my strategy in detail. So you're going to have each part of the strategy broken down. So for everyone wondering how I place these support resistance areas, don't worry, I'm going to link you to free webinars that are like an hour and a half long each, and they're going to tell you in detail how to place support resistance areas. So don't worry about that at all. That's going to be covered. I'm going to be talking about candles. Well, I won't be talking about candles much more in this webinar, but I'm going to be linking you to a webinar where I talk about candles in detail. The reason I'm not going to talk about my strategy in great detail in this webinar is because it takes a long time. I can't cover my entire strategy in one webinar. That's why I have those free webinars, and those free webinars are only 2 months old. They're very current. I'm going to be linking you to those webinars where I talk about my strategy in detail. But now we're going to start doing the question and answers part, which is the best part of my webinars, because the part where I drone on and on and on is usually not that interesting. So let's start with questions and answers, guys. Feel free to ask me any questions about my strategy. Let's not talk about, where do you think Euro USD is going to go tomorrow? Let's keep it specific to my strategy and to price action and stuff like that. James, do I consider any difference between support and resistance and supply and demand? There are very slight differences, but for the most part, support and resistance is... No, actually, I don't consider any differences. Support and resistance and supply and demand are pretty much the exact same thing, in my opinion. They're just slightly different ways of viewing the same thing. Okay. Guys, if I miss your questions, it's not because I'm ignoring them, it's just a lot of questions are coming in, and it's going to be hard to keep track of all of them, so I'm not ignoring your questions. If I don't see your question and you feel it's been skipped, just copy paste it back in, and I should get to it eventually. Do you differentiate, Magnus is asking, do you differentiate between support and resistance areas? Or do you treat them the same? That's a pretty good question. Okay, basically what I do with support resistance areas is I place my support resistance areas on my chart. So once they're placed, this area is both a support and a resistance area. As long as price is below this area, this is not the best example because price is on top of it. So let's look at New Zealand USD. This would be a nicer example. Okay, so as long as price is above an area, So this is an area of support or resistance, but as long as price is above it, this is an area of support. When price crosses above an area of support, when price crosses above an area of resistance, so it starts here, it crosses above it, goes to where it is now, this area of resistance becomes support. And as long as price is below an area, it's an area of resistance. So this here is resistance. Now, all these support resistance areas are pretty much the same. I don't really differentiate between support resistance areas in terms of strength. If this area, for example, this area here, has two very strong, very recent bounces. This bounce here, even this bounce here, they're pretty strong bounces. This area here, this one here, price, the last few times it's come through here, has crossed through here without that much trouble, apart from here. So I don't differentiate from between support resistance areas in the sense of, this area is much stronger because price has bounced from here more times in the last month or two. I don't really bother too much about that because, when you start grading support resistance areas based on how many bounces they've had in the last few months, you start to lose faith in the ones that don't have many bounces. And, when you start making that mistake, you're going to skip a lot of good trades. So try not to do that. You shouldn't differentiate between support resistance areas based on strength. That's a good question. Oh my god, there are so many questions. I have to scroll all the way up. Okay, guys, I think I'm gonna miss a few questions here because I can't find where I was. Anthony from South Africa. Nick, do you do breakout trades? No, I don't do breakout trades. I stick solely to reversal trades. Reversal trades are the only type of trading I do at the moment because there's more than enough reversal trades for me and I don't really need to do breakout trades. I used to do breakout trades a long time ago, but as the market changed, breakout trades were great back in 2008. Now, let me show you why breakout trades were back in 2008. I used this example with one of my advanced course webinars. I used this example, and it ended up being quite funny because it shows us a very clear reason as to why breakout trading is not as strong as it used to be. So let's check out this GBP/JPY daily chart. So the biggest candle we see on this GBP/JPY daily chart is this one, pretty much. Maybe this one's slightly bigger. It doesn't really matter that much. Let's just stick with this one. So I'm going to place two lines here. Okay. So this, I'm sure you guys would agree, is for a daily candle pretty big. In the last few months, it's one of the biggest daily candles we see on the chart. You guys agree with that? Actually, please don't answer, otherwise it's going to be harder to find the questions because I'm going to have to scroll down, up and down further. So please don't answer that. I'm sure you guys agree this is one of the biggest indecision candles. So let's scroll back to 2008. 2008. Okay. So we can see these two red lines here. That huge candle, that huge candle that formed a few days ago or a few weeks ago, that huge candle, back in 2008, that candle was tiny. It's very, very small. These are the two red lines that outline the boundaries of that candle, and this is how price moved in 2008. 2008 was completely different for trading. This candle here is a daily candle. This candle on GBP/JPY in a single day ranged 1,177 pips. That's not even the biggest candle. Look at this candle. In a single day, this candle, 2,070 pips. So when someone asks me, Nick, do you do breakout trading? And why did you stop breakout trading? I stopped because the Forex market has changed in the last few years. We've gone from a market that was extremely high volatility, price moved like crazy, to this kind of market. And I prefer this kind of market. This is so much better because it's a lot more relaxed. It's a lot more predictable. You don't have to worry about taking a trade, coming back 10 minutes later. It's moved 1,000 pips. You don't have to think about that. You don't have to worry about that. You could pretty be pretty comfortable in the fact that if you check back in 10 minutes, it may have moved 10 pips, not 1,000 pips. So I don't do breakout trading because breakout trading is not quite as profitable as it used to be. Breakout trading just isn't. It's not as profitable as it used to be. Taking breakout trades when markets were moving 1,000 pips in 10 minutes. Yeah, that's a bit of an exaggeration, to be fair. It didn't usually move 1,000 pips in 10 minutes, but let's say 1,000 pips in a few hours was common for GBP/JPY back in 2008. If I took a breakout trade, price was moving a lot more. It was a lot more likely if I shorted when price broke through this support area, it would reach this support area with no problem. It would probably reach this support area with no problem. So that's why I don't breakout trade anymore. Sorry, that was a long-winded answer to a very simple question. But yeah, I don't breakout trade, guys. How often? Okay, Jack is saying, Nick, on the 4-hour New Zealand USD. Okay, so Jack, on the 4-hour New Zealand USD, why would you not enter? 2 candles still left. Also, looks like good decision on the SR level, but would have been stopped out. How would you know to wait? 2 candles to the left. I'm not quite sure which one you mean. I probably wouldn't have entered this trade on the 4-hour because, like I said, on the 4-hour this was not that good a setup. It was a lot better on the 6-hour. Well, it was a lot better on the 12-hour, but it looked nicer on the 6-hour. I'm assuming you mean this here, this candle here. Yeah, this must be what you mean. I'm going to just guess here that you didn't mean the 4-hour, you meant the 6-hour, because 2 candles to the left on the 6-hour was this candle, which looks like some pretty good indecision. So I'm going to assume you meant this candle here. Oh yeah, okay, cool. You did mean the 6-hour. Awesome, awesome. So with this candle here, I mean, it is possible that you could have entered here. It depends. Wait, let me see. So the entry here would have been 84.35 stop loss. Yeah, you could possibly have entered here. You are right about that. It is possible that you could have entered here. And had you entered here, you would have definitely been stopped out. The strategy is not perfect. You are going to take some trades that are bad, and had you entered based on this indecision candle, you would have taken a bad trade. But this is why I was saying the setup looks so much better on the 12-hour. There are a few problems with this one on the 6-hour, and one of them is mainly the preceding trend being kind of weak. But overall, this is still a pretty decent trade on the 6-hour, and this still probably would have been a valid entry here with this candle. But one of the core concepts of the strategy, which I haven't gone over today, is where indecision forms. Now, indecision should form in the center of a support resistance area. Indecision should form around about here. The closer to the center it is, the better the indecision candle. When indecision forms here, it's better for a few reasons. We have 5 minutes left. We have enough time to talk about this because it's an important subject. I want to show you why this candle is a lot stronger than this one in terms of a reversal setup. So this candle here, it formed on the center of the support resistance area, pretty much. I mean, it formed a little bit lower, but it formed pretty much on the center of the support resistance area. Now, this candle gives you a much, much better entry. This candle gets you into this trade around about here, 84.23. Viet said he entered at 84.25. This candle up here, you're probably going to get in at the 84.36, maybe 84.37, something like that. So with this candle here, you're getting in more than 10 pips later than you would get in with this candle. So you have to ask yourself, where are buyers the strongest? Buyers are the strongest at the center of the support resistance area. Buyers are strongest around about here. The further buyers get away from the center of the support resistance area, the further buyers move away, the weaker they get. So what you want to do is you want to try at all times. Now, you're not always going to get it, but you want to try at all times to enter as close to the center of the support resistance area as you can. Like I said, it's not always feasible. You're not always going to get that entry, but you want to try to enter as close to the center as you can. Generally speaking, anywhere between the center of the support resistance area, well, a bit higher than the center. You don't want to enter right on the center. A bit higher than the center. And the end of the support resistance area, of the support area in this case, is going to be a good entry because you're going to get in a lot earlier than you would if you're entering up here, outside the support resistance area. And buyers are going to be stronger. You have a greater chance of hitting your target before buyers get weak and before they turn around. So this candle here is in fact a lot stronger. There is a downside to that, which I want to make clear. If you enter inside the resistance area, there is a chance that you're gonna jump into a trade a bit too early and the trade's never gonna take off. There is that chance, but like I say, no trading strategy is perfect. My trading strategy is not perfect. I've shown you a bunch of good trades today, but over the past few weeks there have been failed trades. You're never going to get a strategy where there's no failed trades. Had you entered this one on this candle, wouldn't have been the strongest setup, but I could see you wanting to possibly enter on this candle, and you would have it would have hit your stop loss. But I should also add that if you've been trading the strategy for a while, you probably wouldn't enter on this candle. It just doesn't look that strong overall. Hopefully that answers your question. Does it answer your question? Alright, awesome. And like I said, this trade, it looks a lot better on the 12 hour because on the 12 hour, it's forming right on the center of the support resistance area. So on 12 hour, this trade is forming, right on top of that center. And the trade, the entry is at the high of indecision. And the high of indecision is within, it's pretty close to the center of the support resistance area. So you get a really nice entry, and the preceding trend looks a whole lot stronger. That's one of the key concepts to my strategy that a lot of people don't understand. You have to have a strong preceding trend. Strong preceding trend is a key part of the strategy because sellers, when you're entering a bullish reversal, you're entering a reversal from sellers. You're entering a reversal. And if the preceding trend isn't strong, you're not entering a reversal anymore because it's not reversing from anything. And a lot of people don't get that. So, if it's got a nice strong preceding trend, it's a lot better. On the 12 hour, this is a strong preceding trend. On the 6 hour, it's not as strong because it's a lot more spread out. So I personally probably would have just went with the 12 hour. But like Viet said, he probably would have went with the 12 hour too. He was just trigger happy and he went with the 6 hour. So yeah, but we've talked enough about this trade anyway. How often do you move your support resistance areas from Wayne? I tend to move my support resistance areas every few months, but recently I've been moving them a lot quicker. I move my support resistance areas when they need to be moved. If I start seeing bounces from Okay, so let's say, for example, I have my support resistance area here, like I do. Price comes back down, uh, comes down to here, bounces away, comes down to here, bounces away, breaks down, then pushes back up, and it bounces from here. So it's clear that price is bouncing from this level instead of this level. Then I'll pull this support resistance area up a bit to be more in line with recent bounces. Okay, cool. I answered that question. Okay, so Edwin. Hello, Nick. Which pair works the best with this strategy? All pairs. This is price action based trading. All pairs, all markets. So not just Forex, futures, stocks, all pairs, all markets. Technically speaking, all time frames, but the lower you go, the more bad trades you're going to get. The more fake outs you're going to get, the lower you go. So it's best to stick with higher time frame charts, which is the entire concept of this webinar: higher time frame charts, low maintenance trading. So yeah, to answer your question, any pair, any time frame technically, but you want to stick with the higher time frames, any market. Price action is just price action. We're just looking at the candles and we're looking for signs that price is turning around at areas where historically it's proven that there are buyers or sellers. So yeah, any time frame, any pair. Yeah, this will be recorded. I'm gonna scroll back up and see if I missed any questions. I'm not sure if I understand your question, Ashgar. What time for a new trader who follow your strategy daily or any other? If you're asking if you're new, what time frame should you be looking at? For a new trader, if you're new to Forex, I would probably stick with the 12-hour and the daily, simply because they're very, very low maintenance. You don't have to do too much work to trade the 12 hours, and you have a long time to plan your trades. So if that's your question, then yeah, 12-hour or daily for new traders. Jim, typically there would be a setup occurring every day on the 4-hour, would you say, or less often? It depends how many pairs you're looking at, but yeah, I would say on the 4-hour you would get a setup almost daily. I probably would not usually see a setup on Monday, and I would not take a setup on Friday. Well, depends. Some Fridays on a 4-hour chart, I'm not going to take the setup. If it's very early on a Friday, I'll take the trade. So I would say if you're looking at 5 to 6 pairs, 4-hour charts, you're probably going to get a setup daily, or at least 3 to 4 setups per week. Monday is usually a slow day for this strategy because you need to wait for preceding trends to form for price to reverse from them. Nick, do you wait until the indecision candle is closed? Yeah, definitely, man. You have to wait for the indecision candle to close. This candle has to close, but the next candle, as soon as it breaks the high of the indecision candle, or the low, if you're taking a short trade, that is usually the signal, the trigger for entry. But like I said, I'm going to be linking you guys to webinars that explain that in a bit more detail. Desmond, that's a good question. Desmond is saying he's already trading on higher time frames, 8-hour and daily. But for support and resistance placement, does he place it on the 8-hour or the daily chart? So which time frame to place your support resistance on? I found that support resistance is much more effective when you place it based on the 8-hour chart. Failing that, I would drop down to the 4-hour chart. I wouldn't place support resistance on the daily to use on the 4-hour, because the 4-hour or the 8-hour, it's going to give you a much clearer idea of where the bounces are and a much clearer view on the price action, whereas the daily, it's a bit too condensed and you don't really get a clear view on price action. Ruben is saying that he thinks he remembers me saying that I used the 1 hour time frame as the lowest. And does that mean my strategy is not as strong on the lower time frames? Okay, I used to use the 1 hour time frame, and I still sometimes do. Sometimes I'll take a 1 hour chart trade, but it's very rare because my strategy has always been stronger on the 4 hour, 8 hour, 12 hour daily. That's just price action. Price action is stronger the higher up you go. Nick, what's your most traded pairs? Do you have any backtest results on these pairs? I wouldn't really say I have most traded pairs. Certain times of year, I get more trades on certain pairs. Uh, right now, New Zealand pairs are giving some nice trades, and JPY pairs are giving some nice trades, like GBP JPY. Go back a few months, it was the AUD pairs. They were giving off most of the trades. AUD USD, AUD New Zealand, Euro AUD. It just depends. It changes. And do I have any backtest results? I don't really do any backtesting. I do forward testing. So do I have forward testing results in the sense of do I keep a record of my trades? Yeah, definitely. Okay. Uh, Ketchel is asking, is the strength of the preceding trend critically important to whether you take the trade or not? I already answered this. I'm assuming you asked this before I answered it. But I'll just answer it again real quick in case you missed it. Preceding trend is extremely important. Stronger the preceding trend, the better. Wait, where was the... Yeah, GBP JPY. Okay, so GBP JPY had pretty much a single candle preceding trend. It had two candles technically, but most of the preceding trend was this candle here. This was a very strong preceding trend. I like strong preceding trends, and preceding trends are critical because price has to be reversing from something. You're not going to take a reversal trade if it's not reversing from something. So sellers were completely in control here. They smashed into an area of support, an area of buyers to control the price. So what is happening here is pretty clear. Sellers had control of the price, sellers hit support, buyers to control the price. If you don't have that strong preceding trend, then all that's happening here is buyers are taking control of price and pushing up, but they're not reversing from anything. So yes, preceding trend is critical because preceding trend shows the reversal occurring and it shows buyers taking control of price. It shows buyers are stronger than sellers, and that's the key fact. Buyers are stronger than sellers, therefore we take a long trade. Sorry, therefore we take a long trade. Would reversal trades work in any market, as in if the market becomes more volatile as in the past? Yeah, Douglas. I mean, reversal trades were working just fine back in 2008. The reversal trades work in any market conditions. Reversal trading the has been the constant in my trading strategy since 2000 and 2003. 2003. Wait, I got to figure out when I was 18. I was born in 86, therefore I was 18 in, my math is horrible, 2004, 2005. So reversal trading has been a constant in my strategy since 2005. So it went straight through that period in 2008 when prices went crazy without any issues. So yeah, reversal trading works in any market conditions. I've been trading reversals for 9 years consistently, so I would say it's had everything it can that can be thrown at it, and it's done fine. I realize this works well on all charts, but what pairs you trade and why? To be completely honest, I trade I trade about 15 or 20 pairs at the moment. I used to trade 6 pairs. It used to be 6 pairs. I used to limit myself to 6 pairs, and I used to be really happy with those 6 pairs. But what happened is more and more members came to the advanced course. When more and more members came to the advanced course, um, they started asking me about trades. The members would say, Nick, have you seen this trade? Have you seen that trade? Have you seen this trade? And then I would open that chart, open this chart, open this chart, open this chart. All of a sudden, I have 20 pairs there, and I'm looking at all 20 pairs. So these days, to be completely honest, I'm looking at a lot of pairs, but it can get quite stressful at times. The 6 pairs I used to limit myself to were Euro USD, GBP USD, AUD USD, Euro JPY, GUP JPY, and USD CAD. Was that all of them? Euro USD, GBP USD, AUD USD, Euro JPY, GBP JPY, USD CAD. Yeah, that's 6 pairs. But now I'm trading a lot more than that. But limiting yourself to those 6 pairs is fine, and it's a lot less stressful. But I do suggest if you're trading exclusively daily charts, if you're looking just at daily and 12-hour, because they're such large time frames, you're not going to get trades very often on them. So with those time frames, you're going to want to look at least 10 or 12 pairs. And if you're going to look at 10 or 12 pairs, I'll suggest about 12 pairs for you to look at. So I'm going to go down this list again. I think Euro USD, GBP USD, AUD USD, Euro JPY, GBP JPY, USD CAD, those are the first 6. Then you've got AUD JPY, Euro AUD, Euro CAD, USD JPY, New Zealand USD, USD CHF. If you haven't got that down, I'm not going to repeat it again because I'm starting to annoy myself with it. You can watch it in the recording. We are at about 1 hour, 12 minutes into the recording. So if you mark down that time, when you watch the recording, come to about 1 hour, 12 minutes, 40 seconds, and you'll find that list of pairs. What time frame takes precedence for an indecision candle? Kate, that is an awesome question. What time frame takes precedence? The higher time frame. If the indecision candle, actually no, I should explain that in more detail. Okay, the higher time frame takes precedence, but there are cases in which you might want to take it on the lower time frame. So this New Zealand USD example, which we've looked at to death, is actually a good way to answer this question. So on this pair, you got the setup forming on the 6 hour, you got the setup forming on the 8 hour, you got the setup forming on the 12 hour. So the larger time frame takes more precedence. When you start to see on the 6 hour that price is kind of like getting stuck down here, indecision, more than one indecision candle is forming on the support area. If you haven't taken the trade yet, you could skip up to a higher time frame, and you'll find that there's a single indecision candle in the higher time frame. Obviously, the higher time frame takes precedence, but then, it's not always smart to go too high, because if you go up into the daily, then this trade is still here, but as we said, the entry is a lot later. The entry is the 84.40, which is okay on the daily. On the daily, this entry at 84.40 is okay. I don't really mind on the daily trading a bit further away from the support area. It's not as significant on the daily because usually my targets are bigger on the daily. On the daily chart, the first target would be about 60, 65 pips. But the point I'm trying to make is, the larger time frame takes precedence, but don't get carried away. Every time you see a trade forming on the 4-hour chart, you can't say, okay, I'm going to wait for this to actually form on the daily, because you're going to miss that setup. The large time frame takes precedence, but you still have to trade smart. What are my predictions for Euro AUD? I'm not sure what you mean. Um, I don't make predictions on pairs. I never make predictions. I don't look at a pair and say, I think this is going to go here, because that's useless. Like, why bother predicting what it's going to do? I just take the trade when it gets there. I take the trade when price hits my support area. A, a lot of people, start looking at their charts and they think, you know, it's hard to explain this, but I find a lot of people, especially people on forums, have got no clue what they're talking about, and they just look at their charts and they say, well, I think today New Zealand USD is going to move up 150 pips, and it's gonna slow down in this certain area. That's that's not that important. What you need to do when you look at a chart is you need to look at the price action. You need to look at what the candles are telling you, because the candles are the most important thing in Forex. Candles, charts, price. Candles are price. Candles are just candles are a representation of price. You have to look at what price is telling you. If I look at this New Zealand USD chart right now, or if I looked at this just before this webinar, this 12-hour chart, I had this strong bullish candle. I would look at this candle and I would say buyers are clearly in control of price. If buyers make a new high beyond this candle, 86, beyond the high of this candle, it means buyers are completely in control of price, and they're probably going to push up to my next resistance area. But that is as far as I take my predictions, because this prediction is not making me money. This prediction is not making me pips. I'm looking at this and I'm thinking it might push up, but I'm not confident enough in that, and no one can be confident enough in that to actually take this trade. So that prediction is overall pretty useless. So my prediction for Euro AUD, it looks like it's going to keep moving down, but I would not take a trade based on that. That is a pretty strong move on GBP USD. James, does a support resistance area get stronger or weaker when price touches it multiple times? No, not really. So how many trades per week do you place on average, considering your high time frames? Personally, I take about 1 to 2 trades per week, but that is because I tend to wait for the perfect setups. Um, I wouldn't say. I would say that the strategy produces a lot more trades than that. I just tend to filter out almost all the setups and only take 1 or 2 of them. If you ask members of the advanced course, they're going to say that they take a lot more trades than me, most of them. I take 1 to 2 trades per week, but potentially you could get 4 to 8 trades per week, depending on the week. To be fair, last week and the week before that were quite slow for the strategy, because of NFP. NFP week tends to be slow, and then the week before there was a lot of bank holidays, which was quite slow too. Douglas, do I carry trades over the weekend if it's a daily time frame? Yes, I do. I don't like to, but on a daily chart, if you're taking a trade based on a daily chart, you can carry the trade over the weekend. That's fine. Thanks, Kate. I'm glad you like support resistance areas. Um, I will be linking you to a webinar where I'm going to show you how to place your own support resistance areas. How many monitors do I have in my trading station? I have 2 monitors, but I only really use one, to be honest, because I have tabs. You don't need to monitor your pairs at all times. You can come to your chart once every 8 hours, flick through them, and that is it. You've looked at all your charts. Ketchel, do different indecision candles give you stronger signs than others? Yes, but we're at an hour and 20 minutes, and I'm not sure if we have time to get into the best indecision candles. Okay, on my 8-hour chart, you see new support resistance areas. At what point did I change these support resistance areas? These support resistance areas were changed. Oh, wait, are you asking at what point do I update them on the site? If that's your question, I'm probably going to be updating them this week. Um, Conrad, sorry. Is there a minimum number of pips between support resistance areas? No, not really, but you're going to find that most of them are about depends on the pair. About 80 to 100 pips apart, but on a pair like Euro JPY, they might be a bit bigger than that. Do I take into account fundamental analysis or is it purely technical? Almost purely technical, but I think as a trader you should always keep an eye on fundamentals, especially news releases, because they could have an impact on your trades. And I do read Bloomberg and stuff, Bloomberg, Reuters, quite frequently, just to keep an eye on what's going on. Uh, do I only trade in decision? Do I only trade in decision or do I trade bullish and bearish engulfing as well? I only trade in decision candles. But you're going to find that if you're switching between time frames, sometimes engulfing candles are going to show up as indecision candles on different time frames. Do I have any special tricks to handle risk? Sure. The best way to handle risk, in my opinion, besides having a good money management plan, which is the best way to handle risk, but for this particular strategy, handling risk in a trade is I set a reasonable and achievable first target. A lot of people don't bother doing this, and I think that's always a mistake. Setting a reasonable and achievable first target, you know, let's say this is my first target, this red line here on this trade. Wait, let's switch up to the 8-hour. Looks better on the 8-hour. Yeah, 8-hour looks best. So I set a first target. Let's say I'm going to set my first target around about here. This is a reasonable first target. It's achievable. Buyers are taking control of price here. It's not that hard for them to push up to here. So that it's not always going to be my first target, but I'm just giving you a quick example here. That's a reasonable and achievable first target. When price hits here, when buyers have pushed up to here, I move my stop loss to my entry. So my stop loss started down here below the indecision candle. I move my stop loss up here. I close out half my trade. So if I have two positions, I close out one position. One position remains open to hit the next resistance area. Andres says, when you adjust support resistance levels on actual data, do you use past data to find proof for it? Yeah, definitely. I do scroll back and I do look at past data to place my support resistance areas, but recent data is always the most important. Recent data is always, always, always the most important. But like I said, I'm going to link you guys via email to the free recent webinars, and you can check those out. And I'll be talking in those webinars. I talk about support resistance in great detail. Anyway, guys, we're at about an hour and a half now, so this webinar has been going on 30 minutes longer than it was meant to. This is pretty normal because I end up wanting to answer all the questions, and I think I did answer all the questions. I may have missed some. If I did, I'm sorry. I've not missed your questions intentionally. It's just because there's so many questions, it's hard to keep up. If I did miss your question, I'm going to give you guys my Skype. If you guys are on Skype, you can add me. That is my Skype name. It's just Nick Bongino with no space in the middle of Nick and Bongino. Or you could just send me a quick email and I'll do my best to answer your question. So yeah, I'm sorry if I missed your questions, but I am happy to answer them via Skype or via email. I hope you guys enjoyed this webinar. I hope it was good for everyone. I will be uploading the recording of this webinar by tomorrow. So, yeah, other than that, guys, I really hope you enjoyed the webinar, and I'll see you around the site.